Okay, so let's get started on this evening's session. Okay, so for the first half of the session, we're going to be looking at bookkeeping transactions, and we're going to be having a look at processing receipts and payments into the two-column cash book. And then for the second half of the session, we're going to be moving on to bookkeeping controls, in which we're going to be having a look at the Vat Control Account. Apologies, I think my screen just froze then, but hopefully you could hear what I was saying. Okay, there's just someone joining the session now. Okay, so first of all, bookkeeping transactions, we're having a look at the two-column cash book. Okay, so remember the debit side of the cash book shows with receipts, which is money coming into the business. So this is increasing the asset of a business. And receipts in the form of cash will be entered into the cash column of the cash book. And then any receipts in the form of checks will be entered into the bank column. It's really important within this task to make sure that you distinguish between a cash transaction and a transaction within the bank, and ensure that you enter the amounts into the right column. So it's called a two-column cash book because of them two main columns, the cash and the bank column. But then there's also some analysis columns as well, which tells us which accounts are affected within the main ledger or the nominal ledger. Now, with the analysis accounts, there's also a VAT column as well. And be careful with the VAT column. Remember, if it's an account of a trade receivable or a trade payable, the VAT will have already been accounted for when the transaction first happened. So when, say, the receivable first bought the goods on credit, or if it's payable, when we first purchased the goods on credit, we will have accounted for the VAT at that point. So when we receive the cash from the receivable or we pay the payable, we don't need to allow for the VAT within the cash book. So just watch out for that. Okay, so the credit side of the cash book deals with payments going out of the business. So this is things that will reduce the asset of the business. And again, there'll be two main columns within the cash book, the cash column and the bank column. So just remember, cash column, physical cash, any checks will be entered into the bank column. And again, just like the debit side of the cash book, on the credit side, there will be separate analysis columns. And again, just watch out with the VAT column, with the treatment of VAT. And you'll see that in a minute when we go into the task. So once you've entered all the transactions within the cash book, you need to make sure that you total up all the columns. If the debit side of the cash book is greater than the credit side, then the result will be a debit balance. So it means that we have spent less out of the business bank account than what we had coming in. So it's a positive thing. Whereas if the debit side of the cash book is less than the credit side, then the result will be a credit balance or a negative balance within the bank account. Okay, so there are three payments to be entered into the credit side of Archer Limited's cash book during 1 week. So first of all, you can see we've got a cash purchase listing, and we've also got trade payable listings. Then it says, Part A, enter the details from the cash purchase listing and the trade payables listing into the credit side of the cash book shown below and total each column. So it's the credit side of the cash book, which means it's money going out. So money going out of the business bank account. So it's reducing the asset. And just make sure you do total each column, because sometimes when we see working from students, this is the part they forget. They do all the entries perfect, all the details and all the amounts. They just forget that bottom row to total up the columns. And as you can see, here we've got the cash book, and we've already got a balance brought down at the beginning of the month of £1,000 in the bank account. And you can see here we've got the main columns, the cash and the bank, and then we have the analysis columns, which is the VAT, the purchase ledger column, or the trade payables column. And then we also have the cash purchases. So Emilia, this will be in your book if you have the first into it's mock 1. It's mock 1 task 4. Okay. Okay, so first of all, let's have a look at the cash listing. So we've got a supplier paid in cash of Bob Limited. We were told the net is 200, a VAT of 40 and a gross of 240. So I can see Fatima's put something there. So Bob Limited, cash column 240, the VAT column 40 and cash purchases 200. Good, Fatima. Yeah, so the details column, we'll put Bob Limited. Just make sure that you can see the headings and the columns. So remember, this is a cash listing. So into the cash column, we will enter the gross amount. Into the cash column and the bank column, we will always enter the gross figures. That was 240. And we had the VAT of 40. And remember, it's a cash listing. So we'll enter £200 net into the cash purchases column. Okay, so next we've got the trade payables listings. So these are our credit suppliers that have paid us by cheque. So first of all, we've got Charlie Limited. They paid us £2,000. Then we've got David PLC, paid us £3,000. So what will we enter next into our cash book? Good, yeah. So we've paid Charlie Limited. So Charlie Limited. And we're told we've paid them £2,000. Okay, so which column will we enter the £2,000 into? Remember what type of transaction it is. Yes, good, Elizabeth. It goes into the bank column because it's a cheque payment. Where else will we put this £2,000? Yeah, good. Yeah, into the purchase ledger. Good. And £2,000. Remember, we don't need to allow for the VAT because that will have happened at the point in which we made that credit purchase. Okay, then lastly, we've got the last transaction. So what will we put into the details column? Yeah, so it's David PLC. And then where will we enter the 3,000? Yeah, so again, it's a check. So go into the bank column. And where else will we enter it? into the purchase ledger control account column, yeah. And again, credit supplier, we will already have accounted for the VAT, so we don't need to worry about that. So what's the next step? What do we need to do next within this question? Yeah, do the totals. Okay, so we know the total of the cash column is 240. What's the total of the bank column? Yeah, £6,000. Just watch with this one, because sometimes when it's got a pre-populated figure, so it's got the brought down of £1,000, sometimes students tend to miss that one. They'll total up the other numbers in which they've put in themselves, and they'll just miss out the one that was already there. So just watch out for that. Just move that down. Okay. So part B. So the debit side of the cash book shows that the cash balance brought forward at the beginning of the week was £500, and a further £250 has been received during the week. Using your answer to A above, calculate the cash balance at the end of the week. So how do we go about doing this question? Or does anyone want to have a go at getting the answer? Good, Fatima. Yeah, so if you're not too sure about how to do this, yeah, that's it. Yeah, so you can always do it by drawing out a little T account. So we'll draw one out in the cash book. So we're told within the question that the debit side of the cash book shows that the balance brought forward at the beginning of the week was £500. So £500 on the debit side of the account. And then a further £250 was received during the week. So 250. And then we need to look at the credit side of the cash book. So as you can see, the cash column totaled £240. So that's how much cash we paid out. So we would enter that into the credit side. So you would do 500 plus the 250 less your 240, which gives us a cash balance of £510. Okay, then the debit side of the cash book shows that the total amount of money banked during the week was £4,200. Using your answer to A above, calculate the bank balance. So this time, we want the bank balance rather than the cash balance. If your calculation shows that the bank account is overdrawn, your answer should start with a minus sign. Yeah, good, Fatima. So with this one, again, we'll draw out a little T account. Okay, so it says that the debit side of the cash book has an amount of £4,200 at the beginning of the week. And then if we scroll back up to our cash book, remember this is the credit side, we'd look at the bank column total, which is £6,000. So it shows that we had £6,000 going out of the business bank account. So that would be entered onto the credit side of the account. So as you can see, we've actually spent more money than what we had coming into the business. So we would do 4,200 less the 6,000, which would give us a minus balance of £1,800. Good, so it just shows that the £1,800, it's an overdrawn balance. Okay, so we're going to move on to bookkeeping controls now. Okay, so in this task, we're looking at the VAT Control Account. Now, remember that the VAT Control Account is a liability account. So it is a liability account. So thinking about our dead and click, a liability account goes onto the click side or the credit side. So an increase in a liability will be entered onto the credit side. A decrease in the liability would be entered onto the debit side of the VAT account. So the credit side of the VAT control account shows the amounts owing to the business, owing from the business to HMRC. So this will mainly be the output VAT that the business has collected on sales. So the transactions that we may see on the credit side of the VAT control account are things like VAT on cash sales, the VAT on credit sales, and any VAT on any other type of income. So remember, the business only actually keeps the net value of the sale. The VAT needs to be paid over to HMRC. So we owe that amount to HMRC, so it becomes a liability. So they're entered onto the credit side of the account. So other transactions that may also be entered onto the credit side of the account are purchase returns, or the VAT on purchase returns, and the VAT on discounts received, because again, these will reduce the liability. Sorry, these ones will increase the liability, the amount that we owe HMRC. Now, we also need to watch out for any repayments that have been received from HMRC. So if HMRC owe us money, initially it will be entered onto the debit side of the account. And then when they pay us, we will need to credit the VAT account to show that they no longer owe us the amount. And also, if you think about when HMRC pay us an amount that they owe, it would be a debit into the bank account because it would increase the asset. So we would need to credit the VAT control account. And then the debit side of the VAT control account is anything which reduces the liability. So this would be things like VAT on cash purchases and VAT on credit purchases and any VAT on other type of expenditure. So remember, any VAT on any type of purchases we can reclaim back against what we owe HMRC. So it reduces the liability, the debit side. Other transactions we may see on the debit side are VAT on sales returns and the VAT on discounts allowed. Now, when we make payments to HMRC, remember these will come out of the bank account, so there'll be a credit to the bank and a debit within the VAT control account. Again, it would reduce the amount that we owe HMRC, so it'd be a debit. So let's have a little look at the task. Okay, so you can see here that we're given a number of transactions, and then task A, it says, what were the entries in the VAT control account to record the above transactions in the quarter? So we've got a VAT control account. Let me move this chat box down. And then we need to go through each of these transactions and enter them into the relevant side of the VAT control account. So first of all, we have VAT owing to HMRC on the 1st of January of £50,000. So what side of the account would this go on? The credit side, good. Yes, it's owing to HMRC. So it's a liability. Just right here. It's a liability account. If the liability is increasing, it's a credit. If it's decreasing, it's a debit. Okay, so next we have VAT on cash sales of £5,000. Yeah, good, Elizabeth, yeah. So that was £5,000. There's VAT on cash sales. Okay, next we have the VAT total in the sales day book of £85,000. Good. Yeah, so on the sales day book, remember this would be your VAT on your credit sales. Just write sales day book. So 85,000, yeah. Okay, so next we have the VAT total in the sales returns day book of £3,000. Yeah, so this would be a debit because it would reduce the liability because the customers returned the goods to us. So sales returns for 3,000. So next we have the VAT total in the discounts received day book. Good. Yeah, credit of £150. And a little tip, if you're not too sure, if you get mixed up with discounts allowed and discounts received and with the VAT on which side of the account to enter it on, just think to yourself, discounts received, it's an income because we're receiving the discount from our trade payables. So it would be, the net amount would be a credit into the discounts received day book, and then the VAT would be on the same side as what we enter it into that income account. So we would credit. Oh, really, Bradley? Yeah. And then because when you think a discount's received, so it would be the purchase ledger control account, we would enter the gross amount of the discount into the purchase ledger control account, and then into the discounts received to the account, to the net, and then the VAT control account we would also enter as a credit. So then these two credits would equal the one debit. So if you're not too sure, just think which side discounts received goes on, it's an income. So in the VAT account, you put it on the same side. So VAT on cash purchases, what side of the account would we put that on? A debit, yeah, because we can reclaim it against what we owe. So cash purchase is £1,000. Cash payments. Yeah, again, it'd be a debit. Yeah, because it's a type of purchase, isn't it? So it'd reduce the liability. £500. And then we've got the VAT total in the purchases day book. So remember, purchases day book would record our credit purchases. So what side of the account? I can see Fatima's already put, yeah, again. So it's credit purchases. We'll go on to the debit side of the account so we can claim the VAT back. Oops. So this was the purchases day book. And then the VAT total in purchase returns day book. So this will be a credit, yeah. So as long as you remember which side the sales goes on, then you know the sales returns has to be the opposite. Same with purchases. If you remember that any type of purchase, we can reclaim, so it goes on to the debit side of the account. So purchase returns has to be on the opposite side, a credit. What was it? 1,850. And then last one, a VAT payment made to HMRC. Good. Yeah, it would be a debit. Yeah, so remember when we make a payment, it'll be coming out of the bank account. So it would reduce the asset of cash. So it'd be a credit to the bank. So then it has to be a debit into the VAT account. And it'd also be a debit because it would reduce our liability. What was the amount again? 55,000. Okay, so we've done the first part. And then for the second part, it says the VAT return has been completed and shows an amount owing to HMRC of £57,500. So is the VAT control account correct? Yeah, it's correct. So how do we know that it's correct? What did you do to know that? Yeah, you've got to balance the VAT account off. So if you can, remember you would add up both the debit side and the credit side. And then the highest total from whichever side is the highest, you would enter as a total in both sides of the account. Yeah. So there's not much room, so I'll just enter it just here, although it would be just underneath. So the highest total would be entered onto both sides. And then we would enter on the lowest side of the account, we would need a balance carried down to make that side equal that total. So in this instance, the balance carried down and then the balance brought down would start the next period on the credit side. So when the brought down's on the credit side, it means it's an amount owing to HMRC. And then if we refer back to the questions, it says the VAT return has been completed and shows an amount owing to HMRC of £57,500. So yeah, the VAT return is correct. Okay, and then C, identify whether the following statement is true or false. So the VAT control account is used to record the VAT amount of transactions and can be used to help prepare the VAT return. Yeah, true. Excellent. Brilliant. Okay, so does anyone have any questions?